All right, everybody. Just when you thought there was a whiteboard video, no, we're coming to cardboard. We have breaking news, and I don't have cardboard today for all my notes, but I have this cardboard paper towel, and you can see that I'm sweating profusely, so it's because I was working out. But I just got this, came out of the hedge. I'm gonna link it in the description below, but this is a big deal, and wait for the end of this after I go over it, because I have a personal experience in this, a personal story from 2008. So existing personal lines of credit hinting U.S. economy on the edge. It says Wells Fargo just announced that it is shutting down all of its existing personal lines of credit, a popular product offered by the retail-focused Wall Street giant, a move that will likely infuriate legions of customers. Big R, you know what I'm talking about. This story's about you. The revolving lines of credit, which will be shut down in the coming weeks, typically allow users to borrow $3,000 to $100,000, were pitched as a way to consolidate higher interest credit card debt, pay for home renovations, or avoid overdraft fees on checking accounts attached to the loan. So it says, according to CNBC, it's the latest difficult decision, quote unquote, no it's not, facing Wells Fargo, who's being forced to make cutbacks to the bank's business thanks to restrictions imposed by the Federal Reserve years ago. All right, we're gonna stop there because I think that's a bunch of hooey. So let's go over my notes here. This just says Wells Fargo, honestly. I just need to wipe off my face. In 2006, after I'd sold all my real estate, I was screaming for the hills, and I had friends that were rolling their eyes, thinking I was nuts. They actually thought I was jealous of them, because I was saying to sell their real estate just as they were starting to buy rentals. They'd already owned their own homes, they're starting to buy rentals. The facts are they didn't know that I was in the middle of selling 14 homes at that point and liquidating, and they didn't know that that information was coming from someone that really knew a lot more than they thought about real estate, flipping real estate, owning rental properties, all that kind of stuff. In 2007, we were all handed stimulus checks. Why? Because the economy was collapsing. It didn't collapse in 08. Whatever you think, the Great Recession did not start when Lehman Brothers had to shut its doors. It started in mid-2005 with the mortgage-backed securities crisis. By 2007, we were all being handed checks. Very few people remember that. They also, ironically, don't remember losing their homes and losing everything, because a lot of them are right back in the exact same tip of the bubble. So an interesting story about this. I had multiple lines of credit open to take advantage of that downturn. And I was in a Mexican food restaurant. This was around, if memory serves me right, early summer of 2008. There was an announcement that banks were closing, doing exactly what Wells Fargo just announced. They're closing their lines of credit. They knew that we were collapsing, and they were trying to cover their butts. So they were canceling lines of credit. The person I was sitting there at the restaurant with, I saw it on the news. I literally am looking up and I'm like, oh my gosh, it's happening. We're collapsing. And I said, I have to leave right now. I have to run out of the bank and do something. I'll be 20 minutes. I had a checkbook on me. I had a line of credit that was open and not being used for $100,000. I literally remember it like it was yesterday, because ironically, I ran down, it was with Citibank, and I ran down to Wells Fargo, wrote a check to myself for $100,000, and deposit it in the bank. Back then, just like now, it's smart to have all kinds of banks open. Large banks, regional banks, also credit unions, because you just don't know which one's gonna collapse and have to shut its doors and lock up your assets. Those are whole nother sets of videos though. The person I was sitting with told me I was overreacting. I raced down, I wrote that check. A little after that, I don't want to say between 7 and 14 days after that, that same person got a letter in the mail saying that their equity line of credit had been froze. Now they weren't using it, it was just open. And they were irate. This person was upset and he goes, look, I have excellent credits. Why would you do this to me? They didn't understand why. And now we're right back where we were. I told you guys in the spring that you're gonna see some big stuff happen in the summer. So far, everything I've said, and we'll start doing some videos where we pull clips and dates, has been correct. This is really happening, and what's going to happen in the fall is going to blow people's minds, in my opinion. It could lead in, maybe not really. You won't be seeing the headlines of a full-blown banking collapse in the fall. You may see it. They might hold it off until December, but I'm telling you what, this isn't financial advice. I'm just an investor, but this one's going to be a lot bigger than '08. And to say that this isn't going to happen in the next 24 months, I think is laughable, to be honest with you. So that's my point, is just to be prepared now. When banks start shutting off lines of credit, that means that they are giving up the ability to make interest and charge fees on those lines. So this does come at a cost for these banks. So you have to think, then that means they're very serious, that they know what's happening. All right. There's a reason why right now the repo facility has, I want to say, $1.4 trillion in it, because banks would rather make 0.5% of right now than loan it out to the nation in the form of mortgages at 3%, in cars at 4% and 5%. That's how afraid they are. They'd rather make 0.5% than make 400 or 500 times percent more than that, loaning it to you, because they know what's going on. Like I said, follow the big boys. Goldman Sachs says oil's hitting $100 now within the next 4 weeks, 5 weeks. I believe that to be true. And since I've been reporting that, oil's up 50%. Okay, so I believe it's going to easily double from there. So the food shortages are going to get worse. That is the truth right now. Food crops are literally baking in the sun in the Midwest. Farmers are freaking out. I was just up there talking about this in Washington, Idaho, and Montana. Their crops are literally dying. You're going to see those headlines hit in about 2 weeks, because that's about how long it takes the AP wire to sort of the news cycle to refresh itself. All right. So the moral of the story, at the end of the day, I had $100,000 from an equity line that I protected because of quick thinking. The person with me thought I was blowing it out of proportion, and theirs got seized. Their ability to tap into that equity, even though that credit, even though they had stellar, we're talking over 800 credit score and zero debt, it didn't matter. Okay, and that's what's happening now. So Wells Fargo's just one. I guarantee you the other banks are watching and they're going, okay, what's Wells Fargo doing? Because they've already severely cut the amount of auto loans available to the nation too. I believe at one point last year or the year before, they were the largest auto loan provider in the nation. They are no longer. Okay, so it's happening real time in front of you. I didn't want to do a breaking story. Literally, like I said, I'm working out. But it's a big deal. So guys, check out the link that I put down below. Let me know. I got to get back to work. My coworkers are nice enough to let me do this. All right, guys, with that being said, the Economic Ninja is out now because I don't have an editor. I'm just going to walk around the corner and turn off the camera.